And let's go. We take a look at today's market action and your money. We have Jason Pride, Glenmead Director of Investment Strategy. Jason's going to tell you, the investor, how to position your portfolio for this economy. And Yu Dee Chang, Ace Investment Strategist, Chief Trader, has the best way to play this choppy market. But let's start with Chris Gersh. He's joining us from the pits of the CME, where when you woke up this morning, you didn't know which way to turn. We had good data. We had pathetic data. Market didn't even look at that because maybe they were looking at this massive WhatsApp acquisition by Facebook. We had a great rally today.
We did have a great rally today, and the biggest thing that, probably was that WhatsApp at 16 billion, another 3 billion in paper. Those guys at Instagram that got 1 billion, they're probably waking up like, should I held out for a little bit more? What's going on? But the WhatsApp has been really the big talk here. Right behind me in the S&P, we're looking to test that triple high, about 1852 on the futures. If we don't get above that, things are going to start turning bearish here. But as far as the WhatsApp app, you hit it 16 billion. That's a huge story here in Chicago.
By the way, Jason, part of the WhatsApp deal, they got $3 billion for their 55 employees. That comes to about $56 million per employee. Just from one day to the next, they end up with 56 million. You may not be able to give our viewers that much, but what do you think is going to happen with this market? The January slide in particular, was that all about the weather?
Look, yeah, this is what we've been kind of trying to tell people is just forget the snow. We know in the Northeast we've been hit pretty hard by it. It's definitely been something that everybody's felt individually. It's showing up in the economic figures. It's probably going to show up for a little while longer in the economic figures. But you really got to strip that out from the calculations. You got to look ahead and look forward to what's going on in this economy. Even with the weather-related data as it is, it looks like we're pacing along at reasonable growth rates. The Fed seems to be comfortable enough with it to actually be pulling back their bond buying. The equity market investors seem to generally have this under control and know about it. Valuations are pretty good for equities. They're not so good for your defensive assets like cash and treasuries. So you need to plow ahead with a little bit of risk-taking in your portfolio. Take that risk, be smart about what you're doing, still follow a valuation discipline bias, buy the things that are cheaper within those equity marketplaces, and move on.
Okay, and we are going to get what you think is cheap and what fits into your parameters in a second, but let me get the macro picture from Yu Dee Chang of Ace. Yu Dee, if this weather doesn't start to improve and the data, we know weather's going to improve, but if the data don't improve along with improving weather, we've got ourselves a real problem, do we not?
Yeah, I think on the short-term basis, Liz, that's no doubt. But I think overall, I agree with your previous assessment that basically we have the same story as we had in 2013, right? We have this slow-growing economy, but it's actually pretty surely it is growing. So people are a little bit nervous, yet this is the only game in town. The so-called low-yielding assets are just not doing much. So we're buying dips, we're selling rallies, and that's the story. So whether, like you said, the weather will improve, but whether the weather improves or not, the market is going to push ahead with bump and bruises.
Chris, let's talk about technicals for a second here. The S&P in particular, we are only 10 points off 1850. That is a critical level to a lot of traders. Do you see it that way?
I see it that way. It's what we call a triple top. A lot of times what you'll see is an actual reversal after hitting a level 3 times if it does not go through that level. The 1850 will be tested in the next couple of trading sessions. If it does not go through, that is going to be a heavy resistance level. You're going to see a lot of put buying in the S&P futures.
We will be watching 1850, but right now, Joe Linkent, we got to watch Groupon. We got the numbers. What are they?
Dave, we've got a good beat from Groupon on both sides here. EPS coming in at 4 cents a share, beating the street's estimates for 2 cents, and revenue coming in at $768.4 million. That is a big beat on the $718.04 million the street was looking for. Right now, shares look to be about up 13%, 15% actually in after hours.
Interesting that the options market was showing that no matter what the numbers, we would swing either up 18% or down 18%. We are very close to that right now. A huge jump for Groupon. This is a company that was struggling just about 3 quarters ago. A lot of people had said, you know what, you should have taken the Google money and run. Google had offered a couple of $2 billion to Groupon to sell. They didn't. Familiar. They went public. It's been a tough row, but right now it's looking good.
Yeah, it does sound a lot like Yahoo. Remember that deal that they missed out on? Unfortunately, however, we are still waiting on the numbers from Hewlett-Packard. I just want to see, Chris, if you get any idea from Groupon, these numbers, what's happening after after hours. Is that indicative at all of what's happening in social media in general?
I think it is. I think that you look at the tech space, and out of the S&P 500, you really have the tech sector that's up more than anything else right now. I think you have the Zyngas that have been outperforming. Okay. You've got
Chris, I'm sorry to do it. I've done it twice in a row. It's very rude, but we got the numbers. Okay. We got to be rude to give our viewers what they want. You got the Hewlett-Packard numbers, Joe.
Yeah, that's right, Dave. We have a beat for Hewlett-Packard on EPS and revenue, coming in at 90 cents a share, beating the 84-cent estimate. Revenue coming in at $28.2 billion. Ooh, wow. That's a beat of the 27.19 the street was looking for. Nice. Right now, shares are up about 1.5% in after hours.
Okay, the revenue group is up about the enterprise group, rather. That's the really good margin stuff, just up about 1%. We are looking at the stock almost flat to where it closed, just slightly above as far as the bid and the ask are concerned here. So Hewlett-Packard and Meg Whitman continuing on this path of recovering what had been the glory years of Hewlett-Packard back in the late 90s, David.
Yeah, in the first quarter, by the way, of 2013, HP's revenues fell 6%. They came into 2013 looking terrible. Then they began to work their way back up. A lot of the work from the new CEO, but a lot of the work from a change in attitude on the part of what's happening in the PC industry. At the beginning of 2013, everybody thought PCs were dead. They began to make a comeback, and some of Hewlett-Packard's traditional units in their companies, many of which focus on PCs, began to do markedly better. I'm just wondering, Jason Pride, if the investor has a whole new view of what Hewlett-Packard is and what it can do.
Perhaps they do. I mean, perhaps there's a bit of a story there that's coming about. I think really one of the backdrops here for a lot of this, where we're talking about Groupon, where they're talking about Hewlett-Packard, or we're talking about other companies through this earnings season. This has been a pretty strong earnings season, 65% of companies beating expectations. The bottom line story across the entire market is things are reasonably good, and we're heading in a positive direction. And people should be, whether it's Hewlett-Packard or Groupon or other items, should be taking advantage of opportunities that they see.
And last quarter, Yu Dee, we had so many people saying, oh, it's going to be a horrible quarter. Next quarter, the numbers aren't going to look good for earnings. And sure enough, they have. You cannot count out American ingenuity in business. Right at the moment, it seems to be fighting back. What does that tell you? And why are you picking names like Home Depot and Forest Labs, which just got acquired by Actavis?
Yeah, if you think about it, there's no doubt about that. Earnings actually has been pretty much on target, 63% beat rate. 55% on the revenue beat rate, and that's what we've been getting, Liz, despite the fact that whether the anticipation for the next quarter is stronger or weaker, but that's what we've been getting for the past couple of quarters.
Okay, hold on one second. David's always been the one to interrupt. It's now me. We do have more breaking news. You guys are terrific going with the flow here, but Rich Edson has it from D.C. Rich.
Well, Liz, we're starting to get some more information about what exactly President Obama is going to propose in his budget, raising billions of dollars, this according to the Wall Street Journal, by tightening up international taxation rules. One, according to the Journal, would tighten rules for digital transactions to give them more exposure, if you understand what this means, subpart F, if you're familiar at all with international tax law. The second would classify more of digital income that would basically expose it to that subpart F taxation. It would also create this situation where companies now load up on debt in their U.S. operations and then use that to finance operations overseas. The administration is proposing tightening that up as well. This is all according to the Wall Street Journal. Now, there has been a move in Washington to try to overhaul the entire tax code. Congressman Dave Camp, the chairman of the Ways and Means Committee, is someone who's been working on this. He was working on an overhaul with Chairman Max Baucus of the Senate Finance Committee, but now he's been approved as the ambassador to China. And so there's real big skepticism in Washington, D.C. that we're going to get any overhaul of the corporate tax code. And it seems as though the administration is doing pieces of it by itself, but doing so in a way that will raise several $billions, tightening up
Rich,
digital transactions.
A question here, because it's on the opposite side of what seems to be happening. A lot of companies were hoping there would be some kind of tax forgiveness for a lot of the money that companies have overseas. Remember, by the way, as much as half of Apple's $160 billion that they have in cash is overseas right now. If they were to bring that back, that could be put to good use, creating jobs right here in America, but they need a tax kind of holiday to have that happen. No talk about that right now.
Right. The administration has been fairly opposed to that. They'll have that conversation in a certain way. But what they've proposed for their corporate tax overhaul is to basically have a one-time charge, not necessarily something that would be as much as companies would pay to repatriate that money, but they'd still have to pay something to bring that money. As you know, David, a lot of companies in the United States are in a very unique position. We tax companies on their worldwide income, but we only tax them when they bring that money over here. A number of different proposals on how to get that money back here. That's one that's bandied around, but not something that the administration's in love with.
Thanks, Rich.
Okay, so Yu Dee's picks were Home Depot, Goldman Sachs, and Forest Labs. I promised, Jason, we would get your picks as well. Let's get to them. I'm sorry, yeah, you like Home Depot, Accenture, and Abbott Labs.
We'll get a little bit of overlap here and there. You know, the bottom line for us, we only pick some domestic stocks here. Our actually favorite places to be is actually be investing in the international markets, particularly international developed in Europe and Japan. But look, everybody has some domestic investments as well. Our bottom line here to our picks is we're going for stability and above average profit margins. We want these companies to be able to churn out greater earnings growth rates and greater business growth than just what you can get in a 2% to 2.5% sort of growth environment, since we're still kind of stuck in a little bit slower than normal growth environment. And the additional thing here that I'd say is that we're picking reasonably fairly valued companies, maybe some that are a little bit discounted in the 15 to 17 times normalized earnings range. The point is that we want to be over-positioned or over-allocated to equities here at this point in time, but not by such a degree that we're completely over our skis. We want to be in an environment where there still are some risks. We want to be in an environment that we can react, so that if markets do pull back again, we're able to add again and come back in, and we can kind of play that game of batting back and forth, as the markets will be providing us some opportunities, as they always do in the course of a year.
There wasn't overlap, actually. Yu Dee liked HCN. So what we'll do is we'll put this up on Facebook.com/AfterTheBell, so everybody can get their picks up. And thank you all very much. Jason Pride, Yu Dee Chang, and Chris Gersh.
Thanks for going with the flow, guys.
Yeah,
well,
indeed.
natural gas, we may have seen some red today, but for the year, it is up 40%. So how can you cash in on the surge? We have 4 names to help you ride this rally.
And Facebook writes a